Are we live? Are we live? Are we live? Come on, baby. Tell me. I should be live. Aye. We are live. Are we live? Yeah, alright, sick. Right, so if you guys can hear me, let me know. Let me know in that comments. This is my first time streaming to YouTube properly through OBS, so hopefully I have everything set up right. You should be able to hear desktop audio. Look, if I do this, we get some nice classical music going. You love to hear it, baby. You love to hear it. Right, turn that off again for a sec. Hi, Jack. We're live. All right, awesome. Awesome. We're all live. Okay, sick. So, you see, I'm set up here. The earnings call is meant to start in about 5 minutes or so. Usually these things are a little bit late, but look at this, guys. Right, so first of all, what happened with the earnings? 49% revenue growth, 170 million in cash flow from operations, up 404 million year over year. Like, if you read the earnings already, they're positive. They look good. They're happy days. Look what the stock's doing. Down nearly 11% just like that. I mean, that is absolutely insane. Look at this. That's not even the full picture just yet. 1646. Okay, it is now. Look at that 15-minute chart. This is based off of good earnings. Everything is down today. Look what Tesla's doing. Tesla's down 6.33% for no reason. PaySafe beats on revenue, down 7.5%. Pretty much everything is that. CCIV down 6.5%. Look at this one. This is the worst of all. Oops. Down 20% after an 8% dip yesterday. This market hurts, my friends. What's up, guys? Myrtle, how you doing, my friend? Why do I think it's dipping? The whole market is dipping. Growth is dipping. Hedge funds are keeping us down, down, down. They don't want us to eat. All good. We're live. Do I hear a 12? Do I hear a 15? Bro, I don't know. But the thing is, especially the guys who are in the Discord, I assume some of you guys are in here. You know that I haven't been particularly happy buying stocks right now. Pretty much every growth stock's a fallen knife. But Palantir is one where at these prices, it's just with a 5-year outlook, it's so juicy. It's so juicy. Thanks a lot for everything. Very happy to have you back. Thank you so much, French Bulldog, my friend. Do I know G or WG? Not really. Smooth operator. We crashing for good. The crash won't last forever. Crashes don't last forever. You guys already know this realistically. Sorry if I'm looking over here as well. I don't have a setup for YouTube properly yet, so I have to like I have to look over here to see the comment section. Right, let's see. Oh jeez, this is rough though, my friends. It's very rough. Anybody who's in the market short term or anybody who bought at the top is not feeling good lately. We'll put it that way. Not feeling good whatsoever. Let's get a bit of classical music so we can all just chill out. I think we all need to chill out a little bit. Creepy mods. Man, a lot of people are in the same boat. Times are rough right now, my friend. But I mean, I think everybody's going to come out of this after learning a whole lot of lessons. And you need to learn that there's more to life than the stock market. And a lot of people look to, you know, the best investors of all time, people like Warren Buffett, Benjamin Graham, all those guys, and have the utmost respect for them, etc. Excuse me. But like, they're all long-term investors, and they have lived through more crashes than years a lot of us have been alive. You know what I mean? It's like your portfolio is not going to be built in a quarter or in a year or in 2 years or in 3 years. It's going to be built in the decades to come, whether you're a safer investor or investing in these growth companies. And like, a part of it is crashes, and right now it's the growth stocks that are crashing horrifically. Yeah, close your account, take a break. The stock market is ever going up again. Yeah, that's not true whatsoever. I think we all know the stock market ultimately is going back up again. I mean, the stock market in general is doing fine. It's just growth. Everything that's been overvalued for a considerable period of time is getting smashed. There'll be a huge recovery towards the end of the year. Yeah, that's the thing. A lot of money rotated out of growth, rotated out of pennies into crypto. And that's where a lot of the money is flooding in right now. You know what I mean? It's cyclical. A lot of that money will come back out of crypto into the market. It's that simple. It will happen at some stage. It's just a matter of waiting until then. But this earnings should be starting any minute now, baby. 2 years, Whale Club? Why do you think 2 years? Nathan Barnes, this will be fine in 5 years. You already know, baby. You already know. But creepy, honestly, everybody's stressing over it right now. Literally everybody. You know what I mean? Some people handle it better than others. Just stop looking at the portfolio so much. Take a few days away from looking at stocks or the portfolio if you need to, because you staring at it isn't going to change the outcome of what's going to happen. I know obviously you can't actively manage it if you're not looking at it, but especially if you're in long-term stocks, you don't need to watch the pain happen. And if you know for a fact you're going to be holding them for years. Stocks are, yeah, concerned about Neo. Neo's down big. I'm glad I have a really nice cost basis in, I think it's the 13s or else the low 14s. Trying to find some more buying power, yeah. Like, I'm ready to buy. I'm ready to unload. And I've been buying little bits and pieces. But I mean, right now, everything's still falling. There's no sign of a clear reversal. So I don't see a need to start pumping money into the market just yet. I remember getting a lot of criticism like a month ago when I wasn't buying anything. And there was no clear signs that we should buy. And things have continued to go down, you know. Hedge funds are pissed about GME. That's a fact. That's an absolute fact. They don't like the little guys winning. Relax and play some Warzone. Yeah, go play some Warzone. Right, come on, Palantir. Hopefully there's some good news for us. There wasn't really any news in their release. Not anything that I saw in particular anyway. So maybe we'll get something. That's the thing about earning calls. They differ from the actual press release. Sometimes you get some extra pieces of news, especially if you stay for the Q&A. Sometimes they can get probed into giving some information that they didn't even necessarily plan on doing. And with Palantir, we want to know everything. Wish I had more money to buy. Yeah, everybody wishes they had more money, whether to buy or just have more money. Well, yeah, I don't know where the number 2 years is coming out of, to be honest. But I don't think it's going to be that extreme in all honesty. But we'll see. We'll see. I know, Barnesy, bro. Like, everybody just has this classical stuff for every earnings report. It's like there must be one copyright-free playlist that all of the multi-billion and even trillion-dollar companies use. Too mean to pay for some rights to some decent tunes. I won't use margin to buy these dips. No interest. Or Hadries. Yes, Bertel, bro. I might study a bit of mythology relatively soon. Started reading a bit of Plato. Oh, here we are, I think. Once they start speaking, guys, let me know in the comments really quickly if the sound quality is okay or if it's loud enough. I have it up all the way, so I might have to bring it down. We'll see. I mean, the crypto, not yet, but I'm looking to get into some crypto, bro. Potentially.
Welcome to Palantir's earnings call.
You think they could pay for a good microphone as well?
Discussing the results announced in our press release issued prior to today's call and posted on our investor relations website. During the call, we will make statements regarding our business
What's up,
that
George?
may be considered forward-looking within applicable securities laws, including statements regarding our outlook for the current quarter and other future periods,
awesome.
Management's expectations about our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed prior to today's call and in our SEC filings. Palantir undertakes no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided prior to today's call. Palantir's press release, investor presentation, and SEC filings are available on Palantir's investor relations website. at investors.palantir.com. With that, I'll turn it over to Rodney.
Thanks, Jocko. Joining me on today's call are Shyam Sankar, Chief Operating Officer, Dave Glazer, Chief Financial Officer, and Kevin Kawasaki, Global Head of Business Development. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. I'll turn the call over to Shyam to get us started.
Thank you, Rodney. Cutting-edge product and continued efficiencies in distribution drove exceptionally strong Q1 results. Adjusted free cash flow was $151 million, a 44% margin, and this was an increase of $441 million over the year-ago quarter. Revenue was up 49%, billings grew 248%, RPO grew 129%. We had 76% growth in duration-adjusted commercial deal value. We had an adjusted operating margin of 34%, and our U.S. business across government and commercial continues to be on fire, growing at 81%. These results, and for that matter, future results, wouldn't be possible without our relentless focus on product innovation. The area I'm most excited about is the development of Apollo for Edge AI. This was demonstrated at the Dugway Proving Grounds in Utah this past April, just last month. This is live now. We are pioneering an approach that we call micromodels. Just like microservices are the basis of modern software architectures, we believe that micromodels are how you operational AI at scale for enduring advantage. There is no place this is more true than in our U.S. government work on some of the hardest and most important problems facing our nation. Apollo for Edge AI is the next evolution to transform AI into alpha, enabling customers to train, manage, and deploy multiple independently versioned chained models to the edge with ease. Customers will have maximum flexibility to decompose a task into multiple models where each component can be improved and upgraded in isolation and subsequently dynamically chained together, even if links in that chain are running across multiple platforms, from space to mud and across different sensors and shooters, making the sum of the parts greater than the whole. This is operational AI in action at the edge. It's decision advantage delivered. And we are seeing incredible interest here from commercial customers to leverage this same innovation, using AI models on the factory floor to augment human workers, or more efficiently detecting wildfire risks from space, to next generation of predictive maintenance occurring at the edge, on board the airplane while still in flight. Understand, decide, and act at the edge. Turning to results. Where the government response to the pandemic has been efficacious, we are seeing a commercial tailwind. In the U.S. in particular, we continue to generate exceptional results where revenue grew 83% in the U.S. government and 72% in commercial. And we have a lot of headroom for growth in these markets. We only have a handful of Fortune 500 customers and less than 0.1% of annual defense spending. We have widened and are continuing to widen our capability to distribute our product. We see strength in forward-looking indicators and customer interest. Since the beginning of February, qualified commercial opportunities in the U.S. and the U.K. are up 2.5 times. Active commercial pilots across the business have more than doubled, and opportunities across the U.S. and U.K. government continue to develop at pace. We added 11 new commercial customers, and we also announced our partnership with MD Anderson and Centipede. And it's not just established industry players where we are winning. We are seeing opportunities for companies to build their digital infrastructure around Foundry from day zero, where they can shave years off their ramps and mountains of risk off their roadmaps by cost efficiently standing on the shoulders of 15 years and more than $2 billion of R&D. And we see this as the first salvo in expanding distribution of Foundry to broader markets and a broader set of customers. In Q1, we entered into a partnership with Lilium, a revolutionary eVTOL transportation company that will use Foundry to build an integrated business from the ground up, incorporating design and engineering, procurement, testing, production, quality, logistics, and in-service operations. We have also partnered with Sarcos. We have always talked about Gotham as the digital Iron Man suit. Well, these guys, they're building the physical Iron Man suit. Sarcos will leverage Foundry for all of Palantir's well-understood industrials and manufacturing use cases. But you can see how Sarcos can leverage all the capabilities of Apollo for Edge AI to push AI into their exoskeletons. This is Jarvis, Tony Stark's digital assistant, but in real life. These customers and even more prospects in our pipeline are at the forefront of the next major sea change in software, architecting an entire organization around a common operating picture to deliver a connected company from the very beginning, eliminating the chains of siloed data and systems. We are investing in innovation in the West, backing companies with ambitious goals and executing on our ability to move down market. And the fit is natural. Our software can radically accelerate production ramps and time to market and help these companies get to scale on dramatically shorter time horizons. In parallel, the momentum in our government business continues unabated. First quarter government revenue increased 76% year over year, fueled in large part by the 83% year-over-year growth we generated in the U.S. government. We continue to play a critical role in helping governments respond to the pandemic and further our mission to become the central operating system for defense. The scope of our government work is broadening on the back of cutting-edge product like Apollo for Edge AI and investments in distribution. In the first quarter, we were awarded a 5-year contract worth up to $90 million with the National Nuclear Security Administration to provide the operating platform to safeguard America's nuclear stockpile. Of course, our nation's nuclear assets are of crucial importance to the future of our nations and broader Western security, and we are proud to partner on this. As we look forward over the balance of the year, we continue to have tailwinds as we pursue opportunities across both defense and civilian agencies in our government business. In Q1, our software was leveraged in the Global Information Dominance Experiment, enabling all 11 DoD combatant commands to generate globally integrated strategic decision advantage from intelligence, operations, logistics, and supply data, all advanced by AI. This work dovetails with the strong pipeline we see in our government business across a variety of defense initiatives, and we expect deal activity to increase over the course of the year. As we outlined in February, our plans to increase distribution include building a direct sales force, and we've made massive strides so far this year. In the first quarter alone, we've made nearly 50 hires into our sales team, and the pipeline to continue growing this team remains robust. This puts us well on our way to achieving the goal of adding triple-digit sales headcount this year and applying much more force behind our business's momentum. I mentioned earlier the growth of our customers and pilots. Our sales force, combined with outreach and events, are generating more high-quality opportunities. What's more, customers are coming to us with a much deeper understanding of our products and the value they unlock, to the point where the first meeting today really now feels like the 4th or 5th meeting from a year ago. The flywheel is turning faster. In addition to our direct sales force, expansion of channels is a critical element to our distribution strategy. We continue to pursue and invest in our channel partners across a spectrum from complementary software companies to system integrators and cloud providers across both the government and commercial segments. We announced our Ibm partnership last quarter. The pace here is tremendous. We booked our first customers within 16 days of bringing the product to market. We believe there are significantly more opportunities with ISV partners in our future. We have continued to develop our reach with system integrators, developing targeted joint go-to-markets in geographies, industries, and functional areas. Today, 15 different SIs are partnering with our customers to deliver work on our products. We continue to view cloud providers as channels. We have seen a marked shift where cloud providers are integrating Foundry into their reference architectures and core go-to-market activities. At the end of the day, you can either go to market with a architecture that theoretically solves a problem in, for example, healthcare, but has never actually been deployed, or you can take the architecture the NHS used to execute one of the world's most successful at-scale vaccination programs, or the architecture used by NIH's N3C to integrate a huge amount of clinical data for research on COVID in record time. These are battle-tested blueprints for success that drive outcomes for customers in days, and importantly, for the cloud providers, drive a rapid amount of consumption very, very quickly. On the government side, we are seeing more and more traditional defense contractors buying into our architecture, both for internal production and manufacturing of large programs, the same way that we would help, say, any manufacturer, but also to leverage our Apollo for Edge AI architecture into their AI-enabled platforms, to extend the life of these platforms, and to create software monetization for themselves through a joint offering. Really, our successful channel partners across government and commercial are the ones that are realizing that they're going to draft off our software's world-class performance that has always met its moment. The blinding pace of both cutting-edge product development and customer wins that drove these results, they are delivered because every Hobbit's unquestionable resolve in the face of adversity and categorical dedication to our customers and their mission. Thank you all, Palantirians. A final note, while restarting is on our mind, the vicissitudes of the pandemic and continuing to respond is where our hearts are. I want to reiterate that we stand ready to help, as always, any country or company at any phase. There are many regions and industries that still face existential crises in overcoming the pandemic and reforging their operations in this new reality. We stand ready to help, any and all. With that, I'll turn it over to Dave to take us through the financials.
Thanks,
All
Sean.
good so far.
I'll now review our first quarter performance, followed by our outlook. Cutting-edge product and increased efficiencies in distribution drove exceptionally strong Q1 results. We generated revenue growth of 49%, bringing Q1 revenue to $341 million. Adjusted operating income increased to $117 million, representing a margin of 34%. And adjusted free cash flow increased to $151 million, representing a margin of 44% and a $441 million improvement from Q1 2020. This was backed by strong first quarter billings of $362 million, up 248% year over year. Looking at our revenue performance, our total first quarter revenue growth was 49%, ahead of our prior guidance of 45%. The combination of 49% revenue growth and 44% adjusted free cash flow margin is indicative of the unique underlying unit economics of our business. Our U.S. business ended the first quarter with a nearly $800 million annualized revenue run rate, as total first quarter U.S. revenue increased 81%, representing 72% U.S. commercial growth and 83% U.S. government growth. Looking at revenue by segment, first quarter government revenue was $208 million, up 76%. U.S. government revenue increased 83% year over year in the first quarter, and international government revenue increased 57% year over year. We expect this momentum to continue, as we have a significant pipeline of government deals building in Q2 and beyond that we believe will fuel durable, elevated growth in our government segment. First quarter commercial segment revenue totaled $133 million, up 19% year over year, and we are seeing particular strength in the U.S., as U.S. commercial revenue increased 72% year over year. In addition to that revenue growth, we are also seeing substantial increases in leads and new opportunities, and we've more than doubled the number of active pilots in our commercial business since February. Abroad, and particularly in Europe, we are seeing more muted commercial growth in countries that are still facing significant health and economic challenges stemming from the pandemic. But as Sean mentioned, we are continuing to invest in these regions to assist in their recovery, and we expect our business will accelerate as these regions recover. In the first quarter, we closed 15 deals of $5 million or more in total contract value, including 6 deals worth $10 million or more. We ended the first quarter with total remaining deal value of $2.8 billion, up 40% year over year. Remaining performance obligation was $626 million at the end of the first quarter, up 129% year over year. Average contract duration was 3.7 years, up from 3.6 years at the end of 2020. These results are particularly strong when considering government customers entered into shorter than usual contracts in 2020 to accelerate procurement as they responded to the COVID crisis. Moving through 2021, we expect these deals to renew and expand, which we believe will create tailwinds for both duration and deal value. First quarter trailing 12-month revenue per customer increased 29% year over year to $8.1 million. First quarter trailing 12-month revenue per top 20 customers increased 34% year over year to $36.1 million and represented 60% of trailing 12-month revenue, compared with 65% in the year-ago period. As we move through 2021 and beyond and increase distribution across multiple channels, especially into new market segments such as middle market and SMBs, we expect average revenue per customer growth to taper, reflecting our broadening customer base. Next, I'll discuss our margins and expenses on an adjusted basis, which excludes stock-based compensation. First quarter adjusted gross margin was 83%, up 800 basis points versus the year-ago period. Contribution margin was 60%, up 1,900 basis points versus the year-ago period. First quarter income from operations, excluding stock-based compensation and related employer payroll taxes, was $117 million, representing an adjusted operating margin of 34%, significantly ahead of our prior guidance of 23%. In the first quarter, we generated $151 million in adjusted free cash flow, representing an adjusted free cash flow margin of 44%. As we continue to invest in our sales team, we expect related expenses to increase over the course of the year as these new heads come on board. With over $2.3 billion in cash on the balance sheet and strong free cash flow in Q1, we paid down our outstanding debt in early April and expanded the availability under our revolver by $200 million for a total capacity of $400 million, all of which remains undrawn. This provides us with substantial flexibility to pursue investment investment initiatives in support of our long-term growth targets. For our Q2 revenue guidance, we expect year-over-year revenue growth of 43% or $360 million, and we expect adjusted operating margin of 23% for the quarter. Additionally, for the full year 2021, we are raising our adjusted free cash flow guidance from break-even to in excess of $150 million on the strength of our first quarter. Continuing to execute the guidance strategy set forth by our CEO Alex Karp in our year-end 2020 earnings call with regard to long-term revenue guidance, we are providing and will continue to provide revenue guidance of greater than 30% for this year and the next 4 years at each earnings call. And with that, I'll turn it over to Rodney for Q&A.
In regards to long term, my friends, happy. Very happy.
So we'll begin Q&A with questions from our 1.5 million shareholders
We're already on the
submitted
questions.
through Say. And Sham, I'll start with you on this first one.
That was quick.
Avi asks, does the company intend to turn a profit in 2021 or keep using the current resources to expand?
Will they include stock-based
First of all,
compensation?
congrats, Avi, on having the most voted on question. So there are two numbers that we focus on. The first is adjusted free cash flow, which really is the business's ability to generate money, generate cash. And the other is adjusted operating income, which is a measure of profitability excluding stock-based comp primarily. On cash flow, we had a swing of $441 million to the positive, generating $151 million of positive cash flow, a 44% adjusted cash flow margin. So this shows the business's underlying financial strength. And on operating income, we had a 34% margin. This is demonstrating a software company that is efficiently distributing its product and shows tons and tons of product leverage. Not to mention, we're 1 point shy of our long-term targets that we established around the time of the listing. So it really shows that we can hit that. And so if you look at these two things together, we're proving the profitability and cash generation potential of the business here. Sometimes in software, people talk about the rule of 40. The sum of your adjusted free cash flow margin and the sum of your revenue growth should be greater than 40. Right? Well, for us, that's 49% revenue growth in Q1, 44% adjusted free cash flow margin. That's 93. That puts us in incredibly rarefied air. We're in the top 3 of software companies for Q1. But I think actually the most important thing is to realize that we're just at the beginning. We only have a handful of Fortune 500 companies. We are just starting to move down market to medium-sized enterprises. Our government revenue is less than 10 basis points, less than 0.1% of U.S. defense spending. We have so much exciting product vision to invest in. There's just a huge market to go after, and the most prudent thing to do is to invest aggressively to go after it. And that's what we're doing. We aren't focused on profitability. We're focused on growth. We're focused on generating in excess of $4 billion in revenue in 2025, as Alex outlined earlier this year.
Great. Thanks, Sham. I'll stick with you on this next one. We've gotten a few questions around the announcements, the investments that we've announced. So Jackson K asks, why is Palantir choosing to invest in companies such as Lilium and Sarcos Robotics? Can you speak to the motivation behind these decisions, and if investors can anticipate future corresponding investments, how do you view risk, investment size, and potential return?
Thanks, Jackson, for the question. As I mentioned throughout the call, we are relentlessly focused on increasing distribution. And here we see a unique opportunity with ambitious companies to invest in both compelling management teams and compelling businesses, and to partner with them on using our software from day zero. These are folks that are focused on winning. There is no entrenched IT bureaucracy that wants to build their own toy-like solution. They viscerally understand the value of buying the best operating system for their enterprise, shaving years and mountains of risk off their roadmap. That's not even to make mention of all the money they would have otherwise wasted buying traditionally siloed systems, from CRM to ERP to manufacturing execution systems to some homegrown mini-monster. Overall, we think this is a really compelling opportunity to accelerate our business, to accelerate our distribution, and to bet on our customers.
Great. Maybe one more for you, Sham, before going to the rest of the group. Jeffrey T. asks, what are your plans to compete with Microsoft in the coming quarters?
Thanks, Jeffrey. Well, we don't compete with Microsoft or other software vendors or system integrators. We compete against our customers. We compete against our customers' desire to build their own bespoke solution. This is build versus buy. And you aren't actually buying with Microsoft or these other vendors. I mean, with Microsoft, remember Ballmer's famous meme, developers, developers, developers. Or with AWS, look at their product marketing. It's about build better, build faster, build on AWS. The same for GCP, and with system integrators, by definition, you're building. And yes, that's a challenge because our software shamanism means that we build something radically in the future, holistic in approach, and stunning in its results. But it's also something that comes across as both heterodox to the high priest of IT and their reference architectures. But the proof is in the pudding. When the pandemic hit and tore through our health systems and supply chains, the IT orthodoxy failed to deliver anything ameliorative. Foundry and Gotham delivered revolutionary capabilities in jaw-droppingly short periods of time. Our battle-tested, and I mean that literally, our battle-tested architecture is competing against DIY architecture. And the pace we are innovating at continues to put distance between us and the next best alternative, from archetypes that allow you to replace a year of custom integration with a few clicks over a few hours to Apollo for Edge AI that allows you to deliver the most sophisticated operational AI that is frankly just a few steps shy of Skynet. And as I mentioned earlier, we see the cloud providers in particular starting to incorporate these battle-tested architectures into their go-to-market motions and their offerings to their customers, precisely because selling undifferentiated Lego blocks isn't enough.
Great, thanks, Sean. Kevin, I'll come to you with this next one. It's kind of in a similar vein. Donatus asks, do you see Palantir becoming as crucial and impactful as Microsoft Office for businesses? If so, when do you expect to reach that kind of adoption?
Thanks for the question. You know, people should expect more from the modern operating system. You know, for our customers, particularly in a time of great need, we're the most crucial and the most impactful software for any type of business. You know, our users aren't just in the office. They're on the front line, on the factory floor, at an airport, doctor's office, in a war zone. People use our product for their day-to-day jobs, their day-to-day mission. You know, I think about a nursing home worker in Japan who's caring for an aging population and needs to deliver preventative care. Workers at an airline routing thousands of flights, or last year needing to find parking for thousands of aircraft. One of our customers is fighting wildfires in California. Fire risk experts doing on-the-ground inspection with Foundry. The United States and the United Kingdom governments are running two of the most successful vaccination programs in the world, and both are using Foundry. In the UK, thousands of users, from physicians to administrators, nearly 2,500 vaccination sites, nearly 44 million vaccines. And every vaccine is ordered, allocated, tracked, and delivered in Foundry. In the United States, 257 million vaccines, over 1,600 data sets. 50 states, 14 jurisdictions, pharmacies, manufacturers. Foundry is the place for the federal government to understand vaccine supply and distribution chain from manufacturing to the jab. Our products help our customers win, which is what is required of the modern operating system.
Thanks, Kevin. Sham, I'll come back to you on this next one. Johan asks, your recent partnership with Faurecia and the one before with Airbus shows your ability to work with manufacturing clients. Is there any plan to develop that sector even further?
Thanks, Johan. Absolutely. Manufacturing is a huge focus for us, and it's an area of deep, deep strength historically. Just look at Chrysler. Every factory in North America, on the factory floor, you will find Foundry open to manage quality in real time. Manufacturing with chemical companies, mining, energy, suppliers across ecosystems in automotive and aerospace. I'll announce a new customer, auto manufacturing with Peugeot. We have cutting-edge products and archetypes that deliver rapid value in managing working capital, procurement, production, demand forecasting, supply chain management, quality, logistics, the whole chain around manufacturing. And I'd call out companies like Lilium and Sarcos again that are going to build their operations around Foundry from day zero, using Foundry for ERP, CRM, manufacturing execution, for quality, and much more. And our value here extends beyond manufacturing into sales and after sales, turning IoT and telemetry data into real value, not only for the OEMs, for the manufacturers, but for their suppliers and their customers.
Great. Dave, I'll come to you on this next question. We've gotten a few along these lines. Brian L. asks, could you ever see Palantir having Bitcoin or any other type of cryptocurrency on its balance sheet?
Who cares?
Brian, thanks for the question. The short answer is yes. We're thinking about it, and we've even discussed it internally. Take a look at our balance sheet: 2.3 billion in cash at quarter end, including 151 million in adjusted free cash flow in Q1. So it's definitely on the table from a treasury perspective, as well as other investments as we look across our business and beyond. On the other side of that, in terms of accepting Bitcoin from our customers, we do accept it as a form of payment. We're open for business there.
Great, thanks, Dave. Sean, coming back to you, a question about our work in healthcare. Conrad asks, does Foundry have a presence in early-stage drug discovery and compound identification, not clinical trial data, but molecular properties, especially as pharma moves from small molecules to biologics?
Thanks, Conrad. Yeah, our life science work is growing very quickly, and we are absolutely working on the drug discovery end of this. I'd highlight our work with the NCI, the National Cancer Institute, and the National Center for Advancing Translational Sciences at NIH, where we are doing lots of preclinical work. A small sliver, which is actually made public through published papers where Palantir and Palantirians are listed as co-authors. You can check out some of these from past ASCOs. Our work with MD Anderson spans not only obviously clinical, but also preclinical work that we're doing, but more head-on directly to drug discovery. I'm proud to announce new partnerships with Roivant Sciences, where we will work across their portfolio on drug discovery and development. And if you know anything about Roivant, they've invested a lot in computational approaches to drug discovery. With Cellularity, we're going to help accelerate science around their breakthrough cell-based therapies. And a cutting-edge biotech that's focused on translating condensate biology into medicine.
Great, thanks, Sean.
Gucci.
Kevin, I'll come to you on this next one. A question about the go-to-market. Jackson K asks,
Everything's
how
so
is
good.
Palantir planning to expand downstream to medium-sized businesses?
Yes,
Since
I want
demo
this
day
one.
and the kickoff of DoubleClick, has Palantir seen an increase in interest from smaller companies? And if not, how can Palantir better demonstrate its value to these businesses?
I want this. Tell me now.
Short answer is yes. We signed up a number of great small, medium-sized businesses recently, and I expect to see more of this because we're widening our distribution. You know, a big driver of our Q1 results, that's 72% commercial growth in the United States, and what's contributing to the revenue guide for Q2 is our increasing efficiencies of distribution. Our sales cycle is speeding up. On demo day and DoubleClick, demonstrating our product publicly generates interest from all over.
Yes.
Large global multinationals tuning in across their vast organizations, smaller local regional companies are tuning in to learn how Foundry can provide an edge for their business too. And this generates activity. We mentioned that our qualified pipeline has increased by 2.5 times in the U.S. and UK, and active commercial pilots across the business have more than doubled. And I think one of the most exciting things is that our shareholders are showing up in customer meetings. Of the 1.5 million individual shareholders, some are calling so they could bring Foundry to their day-to-day jobs.
Great, Kevin. I'll stick with you. This next question's in a similar vein. Christopher T. asks, with the recent announcement that Palantir is going to offer its software to companies for free, how is Palantir getting this information out to Fortune 500 companies? Is Palantir reaching out to individual companies, or are we waiting for companies to come to us?
Thanks for this question. I suppose this is an opportunity to get the information out there. Over this last year, many of the most successful responses to the pandemic relied on effective data access through Foundry. The purpose of Palantir Unlock is to make Foundry available to those who need it. I can remember about a year ago when we were at the beginning stages of COVID-19, we knew that Palantir could make a huge impact, but we needed to help people learn this. So we began calling. We called cities, states, local governments, hospitals, university research centers, just to let them know that we had the technology that could help. I remember dialing into a state government, and finally, after several calls, finding the one person who's essentially trying to bring together data for the entire state with nothing more than a spreadsheet and a whiteboard. Sitting in a war room, she was trying to figure out answers to critical questions. How many hospital beds do we have? How long until we run out? How many ventilators? How long will they last? How do I get PPE to my health workers? And we're proud to say that this person had the power of Foundry within hours. And that is what we're offering here with Unlock.
Great. So, Shaman's next question, zooming out a little bit, Jose asks, what is Palantir's long-term identity? Will it be a data and AI company, or will it try to be the leader in many parts of the tech industry?
Good one.
Thanks, Jose. Well, we aspire to be the most important software company in the world. And some would say that we're well on our way. We help countries deter and respond to threats from totalitarian regimes. We help prevent terrorism from destroying our way of life. We enhance the protection of data, Datenschutz, and civil liberties to prevent the reaction to terrorism from destroying our way of life. We help governments manage public health. And broadly, we have helped organizations respond to the various shocks that would otherwise have been deathly. And we do this with completely unique software. Foundry as an operating system for the modern enterprise, Gotham as Defense OS. These are generational shifts in capabilities and approach. Personal computing was stuck and stymied before the standardization of the right operating system. Similarly, enterprises are stuck and are stymied without the right modern enterprise operating system. They are either drowning in a collection of siloed applications, or they're just being sold a bunch of Lego blocks and a do-it-yourself dream. Personal computer hobbyists tried to make their own operating systems too. We know how well that worked out. Alex sometimes says that we are software shamans. We have this track record of seeing around the corner and building what the world needs before the need is obvious, when the ability to even have perceived the need feels mystical and is prescient when it meets the moment. And you're going to see this again with Apollo for Edge AI.
Great, Dave. I'll come to you with this next one. Luis asks, can you expand on Palantir's stock-based compensation? Will it further dilute the total shares of the company by increasing float each quarter? And how much longer will it significantly impact EPS?
Tell us.
We have very low dilution when looking at our fully diluted share count. So far this year, our fully diluted share count has increased less than 0.2%, so really, really low. With respect to SBC, it'll normalize over the next couple of years as we're working through this outstanding overhang. And at the same time, when you couple that with our top line growth, we're going to continue to make progress towards GAAP profitability.
And I would just add that obviously everything Dave said is right here. The 20 basis points shows the discipline with which we are managing dilution. But just to zoom us out for a second here, why do we have stock-based comp in the first place?
Yes.
Equity is the fundamental investor-employee alignment mechanism. We want, and frankly, you should want, employees working their asses off with a long-term orientation to grow the value of the company. And so, yes, we plan to continue granting equity to our employees and providing them opportunities to share in meaningful upside in the company in order to maximize your shareholder value.
That's it explained so simply for
Great,
everybody
Dave.
wondering
I'll
about
stick
that.
with you. Jason B asks, why does Papa Carp keep selling his shares?
Jason, thanks for the question and nice Pop Cup reference. We'll call him Alex here. So first off, Alex is one of our largest stockholders, but he has two large option grants that are expiring at the end of December that can't be extended. And so when he goes and exercises these options, it's going to create a very, very large tax bill just to exercise and hold the shares. And as a result, you've seen tax-motivated sales as well as many corresponding exercises for shares that he'll continue to hold. And even after this, he'll continue to be one of our largest stockholders. If you're interested in the nitty-gritty, you can check out our filings if you want a more detailed look.
I'm ready to buy, baby.
Great, Sham. I'll come to you with this next one before we open up the call. Emil asks, experience with Palantir software appears more often now on job postings. Would you consider creating courses or tutorials on how to use your software? Access to a course would give an incentive to the employees to request the software for their companies. Could you comment on that?
Thanks, Emil. Indeed, the number of job postings for roles that require Palantir experience, they're growing every day, and that has really accelerated now that we have 15 large system integrators who are hiring, training, and building practices around Foundry. And we've built robust training to enable these system integrators to build billion-dollar lines of businesses around Foundry. But to your question, we want to do even more here, especially where it can help with restarting economies and returning to full employment. So we're planning to make Foundry training available free to veterans of U.S. and allied militaries, to all of our individual shareholders, and to anyone who's unemployed in the markets that we operate in. We are really excited about this, and we hope that it will make a meaningful contribution to restarting and reopening. So stay tuned for more details around this in the coming weeks.
Great. Operator, we'll open up the call for Q&A.
The casual front,
thank you.
enjoy your
If anybody would
8%
like
a
to
year
ask
for the rest of your life.
question, please press *1 on your telephone keypad. Your first question comes from Chris Merwin from Goldman Sachs. Your line is open.
All right, thanks so much for taking my question, and congrats on the quarter here. I wanted to ask you about the commercial business. It looks like growth improved from last quarter, still below 20%, but I know there's a lot that you've been working on there, including the modularization of Foundry, and wanted to hear how that was resonating with customers. And then just the second part of the question would be around the customer adds. Looks like you added 11 new customers on the commercial side in the quarter. Did most of those come from IBM, or were those through your direct sales force? Thanks.
Good one.
Great. Thanks, Chris. The commercial business is gaining more and more momentum. As we mentioned, it grew 72% in the U.S. So what we're seeing is where economies are opening, there's just incredible traction there. We've hired 50 sales folks in the last quarter. You're starting to see that translate through in terms of activity. 2.5 times the number of qualified opportunities in the U.S. and the U.K., double the number of commercial pilots. The product investments that we've made around modularization and archetypes, those are what are translating also into increased activity. It's what's fueling our ability to do substantially more pilots here. The channel strategy is also helping us source more customers. You know, the IBM partnership generated its first deal within 16 days of being launched there, so lots of momentum there, a place that we'll continue investing in. Overall, we're quite excited. We continue to win deals in Europe. You know, Forencia, Lilium in Europe, Peugeot, NG, so a bunch of momentum there. And as Europe starts to open and manage through the pandemic, we're also expecting the same sort of tailwind that we've seen in the U.S. In Europe.
Thanks so much.
Nice one.
And your next question will come from Pardeep Varadjan from Jefferies. Your line is open.
Who from where?
Thanks. It's Brent Thill at Jefferies. On the government business, there's a lot of questions about the sustainable strength post-COVID and what you're seeing. I think you said in the past that COVID has opened the door to many conversations, but there's a considerable amount of long tail to that. If you could just talk to.
What?
You're right. There are a lot of things that got started as a result of COVID, but many of those things were not related to COVID response per se. It's really it showed many of the customers where their bespoke, custom-built approach was just never going to get there, and allowed them to mark to market whether a faster buy solution was going to work. And so we've seen that across the business. Of course, the work with the National Nuclear Security Administration is not directly COVID-related at all, but is certainly accelerated by this. We've seen work across healthcare, DoD, civilian agencies accelerate inside the U.S. and outside of the U.S. We've also seen that the pipeline is continuing to build there. We're expecting a lot of defense-related activity to build over the back half of the year and into next year. We participate in the Global Information Dominance Experiment with 11 Combat Commands. That was not even visible during the context of COVID here. So quite excited about the pace at which these things are building. And if you think about Apollo for Edge AI, most of the capabilities we're looking at, they didn't even exist around the time of the listing. Like, the pace at which we are innovating on the product is probably one of the most exciting things, and that is what is creating these opportunities that are compounding.
Again, if anybody would like to ask a question, please press star 1 on your telephone keypad. Your next question comes from Keith Weiss from Morgan Stanley. Your line is open.
Excellent. Thank you. Thank you guys for taking the question, and very nice quarter, especially with those new commercial customer ads. I had a question on kind of the margin side of the equation and how we should be thinking about the expense growth throughout the remainder of the year. So maybe to you, David. You did close to 150 or over 150 million of free cash flow in Q1. You're guiding to that figure for the.
Oh my God! Did I just do that? Oh my God! Give me a sec. Where is it? Oh my goodness. What? Can I get back into the call? Can I get back into the call, please? Are we back?
Let's look ahead to Q2. Very strong revenue guide of 43% growth. Couple that with 23% operating margin, while at the same time, we're really going to be investing into the business, investing in sales hires, investments around the sales team, continued investments in the product and R&D, a lot of what Sean talked about, and we're going to be focused on reopening. We think it's really important to get the company.
Sorry about that, guys.
Get people together and focus on culture.
And your next question will come from Alex Zukin from Wolf. Your line is open.
I'm sorry, guys.
Hey, guys. Thanks for taking the question. I wanted to ask, clearly the confidence in the commercial revenue growth is high given the rep hiring that you guys are putting up. Can you talk about the divergence in pilots in the commercial sector versus the stated revenue growth? And when will those pilots convert to revenues? How visible is that conversion timeline, et cetera?
Yeah, we're quite excited by the pace at which our hires are being accomplished, the ramp that we're seeing for those hires. We're also seeing just a kind of aggregate flywheel acceleration where the ramps are getting faster, the activity converting into revenue is getting faster. So generally, I would agree, like we are feeling very bullish and we're seeing that there. The pilots themselves are compressing in terms of how long they're taking because of the investments made in product modularization, archetypes. These allow us to structure the pilots in a way that something that would have taken 3 months before is now a week or less. This is giving us a lot more capacity to cost efficiently distribute the product, accomplish these pilots, and turn the revenue crank here. And so we're seeing very high returns to the sales force we're building. We want to keep doing more here, look for that to accelerate even further in the back half of the year. And the conversion, we're really happy with it. I think when I just think about the 2.5x qualified pipeline that's been created since February 1st, and then I think about the doubling of the pilots, we're seeing about a third of those have already turned into something. And so as we build bigger and bigger pipeline here, we're feeling good about how that funnel is flowing through. And if you combine that with the additional product investments, the roadmap that we're executing on, we have every reason to believe that we're going to continue to see acceleration across all these dimensions.
This brings us to the end of our audio Q&A session. I turn the call back over for closing remarks.
Thank you all for joining us. We're excited about the quarter. Thank you for waking up early. We'll talk to you all soon.
Is that the closing remarks, bro?
Thank you, everyone. This will conclude today's conference call. You may now disconnect.
All right. So, I mean, all in all, I'm not upset about that whatsoever. In fact, I'm going to be quite happy to see a big red open. I know a lot of people are bleeding absolutely horrifically, myself included. Obviously, I've lost a lot of money over the last couple of months, but I haven't been buying that much. But things are starting to get to stages where you can't really, you have to give them a bit of respect. I mean, Palantir at 1650. I mean, you got to take it seriously. You know what I mean? There's a few other companies out there. A lot of people are going to be asking about Virgin Galactic, I'm sure, after this 20% pre-market red dip. I reckon as soon as we get news about our next flight for Virgin Galactic, they go back up quite quickly. I don't know if it's going to be 15, 20%, or if it's going to be 30%. We'll see. Virgin Galactic has had many of those days in the past. As soon as these guys get good news, they will go back up. Will I add more? Potentially. Again, a lot of the market right now is a fallen knife, and I'm not trying to catch all of these knives. There's a few knives, I'll catch them a little bit. Palantir being one of them. Corsair being another, most certainly. Tesla, again, I will most certainly be pumping some money into. I mean, we're at 580, baby. I might even buy some today. I'll see. I'm wanting to get a much more considerable Tesla stake, but whenever I speak with Tesla, I always say they have a lot of room to go lower. We'll put it that way. Just bought more. Nice one. Oh, yeah, no, I don't know how I managed to close that window. Sorry about that, guys. Virgin, PaySafe, and Palantir. Yeah, Virgin hurts a lot. PaySafe, yeah, but the thing is, look at growth. Everything's doing this today. I had PaySafe up here earlier on. And yeah, look at that, bro. That got worse than when I lost it. That got a lot worse than when I last looked. Jeez. And they had decent earnings. I don't know what to tell you guys. We said in the Discord earlier on, If you have good earnings, you drop 10%. If you have bad earnings, you drop 20%. That's the way the market's moving right now. It's absolutely insanity, boys. It's insanity. You haven't lost till you sold, yeah, 100%. People lost hope and stopped dollar cost averaging. I've just stopped because everything's still dropping. I spoke about this a while ago on the channel. It's like there's no clear sign that stocks have to start going back up anytime soon. So I'm waiting until there is. Now, obviously, I've still been buying bits and pieces, and there are some companies who I think I can't ignore at these prices. But for the large part, when it comes to growth, there's nothing telling us they have to go up anytime soon. Look at Workhorse. Oh, why? What's Workhorse done? Anything at these prices is steal. Yeah, I mean, the amount more money you're going to make in 5 years' time buying stocks now than you would have bought 2 months ago is immense. Remember, Kathy Wood updated her guidance to thinking that she's going to get 30% profits instead of, was it 15 or 20, something along those lines, because of this crash and the amount of more shares they're going to be able to buy. But I saw a lot of comments earlier on, people saying that Wall Street only likes safe money stuff right now. If you think that Wall Street only likes the safe money, they probably want the growth stock. They probably want the stuff that's beaten down. That's why they are beating it down right now. They want you to think that what you have to do is sell these stocks, drive the price lower so they can buy the shares back cheaper. Do you really think that with Palantir, keep in mind, okay, there was constantly huge companies buying these guys in the high 20s, in the high 30s even, okay? Do you think they're not going to buy them now? I mean, do you think it's not going to be orchestrated as well? Of course they are. They're going to load the boat and it's going to happen like that. It might not happen this week, this month, next month. It will happen at some stage. If you think like that, they'll make you think that you should be investing in these safe stocks, they are going to rotate back to these high growth at some stage. Workhorse, what's Workhorse doing today? I see someone just mentioned it. Oof. Oof. That's horrific to see. That is horrible to see, my friends. Oh, that hurts. That hits right in the soul. That hits right in the soul. In the 7s, nearly in the 6s. Oh, I can't even look at it. It's disgusting. This is probably the worst day we've seen pre-market. I don't even know, in a very, very, very long time. This is nuts. Jumia cut into half as well. Really? I'm not in them, but I follow them a little bit. Oh, Jesus, guys. This is literally the worst day I think I've ever seen for growth pre-market. Gee, maybe that's a sign that it's going to start going up soon. Maybe this is their final push to try to get rid of the weak hands, bring those prices as low as possible before they start loading the boat. Who knows? Lordstown? Oh, I haven't opened up Lordstown either. Their earnings are coming out Monday, I think. Right, but the thing is, funnily enough, that's not even the worst day that there is right now. I mean, Tesla's down 7.6%. This is insane. This is absolute insanity. 664. I mean, how can I not add more? This is nuts. Boys, this is insanity. I guess a lot of people are out of cash to buy this dip. I think that's partially it, but I also think there's a lot of people who were just selling because they're scared at this stage. You know what I mean? A lot of people selling because it's scared. Scared money don't make money, baby. And as well, this dip's been dipping for a while, so maybe they bought a lot on the first dip and the second dip and the third dip, and now they have no money left. So I do think there are certainly some people who would be happy to buy now, but they can't because they have no money left. But I honestly think a large majority of it is just people are scared. The hedge funds are doing what they want to do. They're scaring people out of their positions, making them sell. And ultimately, a lot of these people will end up buying back in higher. Yeah, no, it's rough, guys. It's rough. Opinion on Sens. I stopped following my pennies a while back, man. When this, probably a couple of months back. Really, really like their long-term outlook, but I haven't watched them. Maybe I would really love them at this price. Actually, I might have to go back and have a look because there's a few of those pennies who I loved with a long-term outlook with the right risk reward, with right risk management, I should say. Scared to go. Yeah, you see, Ashka is one of the ones they have plenty of cash, but scared to go in because it keeps going down. And I don't necessarily think that's a bad thing either. I mean, I haven't been buying either. I remember I was getting ridiculed on YouTube and such for not buying when, you know, these dips were happening. You know, back here in February, even a little bit before that, probably up here. They're like, why aren't you buying? Stocks are down 10%. And I was like, it doesn't look like it's over. And evidently it wasn't. Lots of people have set orders as soon as market opens, sell off will start. Yeah, definitely. It's going to be a scary day. It's going to be a scary day. I think it's a day where most of us should just not look at the market because, again, it's not going to change anything. So unless you want to buy something today, why add that extra stress to your life, my friends? No need. And then the M, are they green today? Oh, another 10. Everything's 10%, boys. This is actually insane. This is actually nuts. Nasdaq down 2%. S&P 1.23. This is insane. Earlier on in the Discord, I saw IDX was green. Are they still going to be green? No. What, man? Nearly 10. Everything is nearly 10%. Or nearly 20%. There doesn't seem to be much of an in-between. Jeez, this actually might be a buy-in day, even for me. Palantir fair value. A lot of people thought it was around these prices, if I'm not wrong. It depends what a fair value model you're using. Jeez, this is a tough one. How low is Neo coming? How low is Neo? Oh my god! What? If you just say, I could type in any assortment of 3 or 4 letters followed by the word stock, and it's going to say nearly negative 10%. Everything's just dead, man. What are safe things? What are the banks doing? What's Wells Fargo stock doing, for example? 1.55%. All right, so it is still growth. It's still growth. What about Canoe? That's not bad. I mean, they haven't had a good recent history, but that's not bad for today. Google turned green for a second. Let's go, Google. Oh, it's not green anymore. This is nuts. Oh, AMC is up 2%. Let's go. Is this a crash? Nobody knows at this stage. This is absolute insanity. This is absolute insanity. And NOX, Houston, I think we have a problem. I mean, if you don't laugh, you cry. Oh, I don't even follow NNOX, but I feel bad for everybody who does. Jesus. Yeah, we looked at JMIA. This is nuts. This is the kind of day that makes me want to buy. I haven't really been excited to buy for a while. Jeez, this is insane. I wonder how low stocks have to go for crypto guys to sell crypto to come back to stocks. Oh, SPCE, we already know we've been following SPCE. It's ugly. It's better than it was. I mean, Tesla, Palantir. What's my other favorite course they're doing today? They're outperforming. How is negative 3.6% outperforming? Wow. Oh. Yeah, having some boring stocks in there feels good, definitely. Do I expect a correction? See, it's weird, right? Because I do expect the broader markets to come down. But at a similar time, to an extent, I expect growth to recover potentially before they do. They just don't have as much room to go down. It's that simple. Stick to the plan and wait for your paycheck. Yeah. Am I still in OTC markets? Some of them, yeah. Check GGII. There's not really any point because I don't know who they are. Oh, jeez. Okay. There's only 3 stocks on my list that I'm watching of about 40 stocks that are green. Is HCMC green? Let's go. I still have my 1,000,000 shares. That's not green. I've seen green before. That's not what green looks like. Buy an average down today, away for a bit. I mean, I might buy a few bits and pieces today, but again, I'm not going all in anywhere. I'm sitting cash heavy while all of these knives are falling. I'll buy bits and pieces, but again, there's no very clear sign, in my personal opinion, that growth has to start going up anytime soon. So why would I put all my marbles in at once? You know what I mean? Am I still bullish on TMDI long term? Yes, just like all of the other stocks that are getting beaten up right now. I'm still holding my TMDI. I did sell like half when this crash started happening, just because it was one of the higher risk positions in my portfolio, and it worked out well. Thankfully, I did. Yeah, ARC stocks are a 5-year outlook. I mean, yeah, look, For everybody who feels bad about how they're doing, look at the RK. It's down 5% today. Look at this. It's down nearly 35% from the highs after today. It's going to be approaching, what, 37, 38% since February, okay? In a quarter, okay? This is ARK. ARK is better than all of us, okay? They are much more experienced than all of us. That's the ARK K as well. So it's not just you. GOWG, yeah, aware of them. See green at market open. Louis, I know where you're coming from, but this is a proper bloodbath. This isn't just a bit of red that turns to green. This is an absolute bloodbath. What's wrong with institutions? They just want to buy everything as low as they possibly can. This is their game, guys. They're pressuring people like me and you to sell so that they can pick up our shares at a cheaper price. That's their whole game. Bullish on Neo long term, yes. And they're actually finally at prices that are still, in my opinion, quite silly, but not absolutely horrifically ridiculous. I remember getting so much shit for Neo. That's where JPM up their price target. Imagine they bring it all the way back down there, and then they make money on the way up and on the way down. Imagine being a company who manages billions and billions and doing something unethical like that. That'd be pretty crazy. Look, they just filled in a gap all the way back from the start of November. That's pretty crazy that these things actually happen. Wow. Have a good one out there. Yeah, GC, I hear that, but I think that the major indexes have a lot more room to go lower than growth does now. They'll target certain industries all at once. Guys, this is the market, my friends. This is the market. Again, it's just the way it is, realistically. And it happens to absolutely everybody. Let's have a look at I always like having a look at Apple, okay? The $2.12 trillion market cap company. If you go back and look at that max stock chart, I mean, just look at the major dips these guys have had. I mean, look at that. That took the better part of a year. They fell 37%. Since then, they're up 750%. Okay, not even, 7-8 years later. I mean, it's part of the game. Okay, it's part that just needs to be remembered sometimes. Look how many. There's a 50% dip to 2008. Boom! From there, they're up nearly 4,000%. I mean, it's part of the game. Just remember that. And this is Apple. I'm not choosing some high-risk, high-spec stock. Do I own Neo? Yes, I initially bought Neo, I believe, below the teens, and I now have a $14-ish cost basis. Probably like 20 cents either side of that. Into MP. I like MP. Thanks for the live stream. Thanks for showing up, Mark, my friend. Louis, I think a lot of people still have cash. That's why the markets are going down. A lot of people aren't buying. I know I'm not. I know a lot of guys I speak with aren't. Look at CCIV. Jeez, I am very glad. Again, I remember getting so ridiculed here when I took my cost basis out. Thankfully, I did. Now, I still have 390 free shares. And these guys, again, in 5 years, if they are successful, my friends, this is going to be disgustingly cheap. I mean, absolutely horrific. It's going to be horrific how cheap this is. But anyway, my friends, right, I think that's where I'm going to end today's video off. Holding long on Neo, very, very much so, Robbie. Yes, I'm long on Neo. I don't have the biggest position in the world in them. It's not big whatsoever. I don't even remember how many shares I have. But anyway, it does the job. We have a few shares in there. We'll see what happens. But yes, Aaron, the call's over, my friend. I'm ending this video on now, though, so you can go back and watch it if you want to see the actual call. But thank you to everybody for tuning in. I appreciate you guys. Remember, I know today is going to be horrific to a lot of people. Just remember, take care of yourself. Walk away from your phone, your laptop, your tablet, whatever it is, if you need to. Especially if you don't plan on buying today. Don't add that extra stress. You looking at these things doesn't dictate what way the market goes. It's just going to stress you out, okay? So, get through today, my friends. It's fine. Go for a walk, chill with your family, your loved one, whatever it is. But just don't stress yourselves out too much because it's not worth it, my friends, all right?